Well, our view is that the commodity prices are going to stay down for the foreseeable future, simply because the US dollar is rallying and we expect it to strengthen quite significantly over the following months, perhaps for the next couple of years even, and the euro is going to weaken probably against the world's reserve currency. And as you know, commodity prices are denominated in US dollars, and when the US dollar rallies, commodity prices automatically go down in dollar terms. So we think that commodities topped out in April 2011, and now we are 3.5 years into a secular bear market for commodities. Well, we are in a bear market. The bull market ended in 2011 in September for gold, when the QE3 didn't happen on time. That was enough to knock the wind out of the precious metals. The dollar is rallying. Interest rates are probably going to head higher over the following years. So we are now past the point of no return as far as the economy is concerned, and gold is a counter-cyclical asset. In other words, it tends to do well when the world is in trouble. And from my point of view at least, the Western world, the developed world, the developed nations are now past the point of no return, and things are healing. The housing market is getting better in the US. Things are improving in Europe. Japan has unleashed QE, and that's going to slowly reignite their economy. So things are on the mend in the developed world, and that's why there is a lackluster demand for gold. Well, we think the prices for crude oil are going to be range bound, and the path of least resistance in our view is to the downside, simply because there is enough supply of crude oil, at least for the near term. The demand for oil from China is pretty sluggish because their economy is not growing very rapidly these days. So the demand and supply dynamics are not favorable for the oil bulls, and you've got the strengthening US dollar. So I think the prices are going to stay weak for the foreseeable future. Well, they're going to try their best to boost prices, but if there is sufficient supply for crude and other sources, the alternatives and the unconventional oil, especially in North America, then I think OPEC's not going to really have that much of an impact on the oil market. OPEC was a much stronger entity 10-15 years ago. Now they're slowly not as powerful as they used to be, simply because the world depends a lot more on unconventional sources these days.